The best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for a special on-the-go episode of Under the Radar with me, Chua Tian Tian, where we bring you on-the-ground reports of key business events, launches, features, or developers' days. Now, energy, trade, technology, and the green transition. The biggest questions in the oil and gas world converged this week at the 41st Annual Asia Pacific Petroleum Conference, or APPEC, right here in Singapore. Now, hosted by S&P Global Commodity Insights, APPEC features over 200 industry-leading speakers and is set to deliver unparalleled insights into the world and future of the global energy landscape. Now, Money FM 89.3 is in the thick of it all, bringing you a series of on-the-go, under-the-radar specials from our on-site booth with key leaders, driving conversations from Southeast Asia's energy transition to the forces shaping oil prices, global shipping, and supply chains. And to give us a summary of the key APPEC discussion topics and the overall macro energy outlook amid the current geopolitical backdrop is Dave Ernsberger, co-president of S&P Global Commodity Insights. Thanks so much for taking the time today, Dave.
Thank you. It's great to be here, Tian Tian, and the energy is very high, as you say.
Indeed, and we've briefly talked about some of the topics to be discussed at APPEC by S&P Global Commodity Insights held this week. Could you give us a summary of the key APPEC discussion topics and why they are relevant to energy executives, policymakers, market participants, given the hot button issues the industry is facing as a whole right now?
Absolutely. Well, APPEC is a gathering of leaders across the global energy industry who are involved in managing both the short term of the market and the medium and longer term planning as well. So the key topics here this week are a blend of short term and long term concerns that are on the minds of leaders across the industry. In the short term, we're coming right off the back of a decision by OPEC to increase production of crude oil, which will come into effect from October of this year. And people want to know, what is that going to do to the price of oil? And what is that going to do to supply and demand fundamentals after so much volatility we've had this year? Longer term, there's a big debate about the role of LNG and natural gas. How will that market develop in the next 6 to 12 months? Doesn't look as volatile as oil, but there are still questions of security to be thinking about there. And then beyond that, the medium to longer term, what is the role of the energy transition? How will Asia move to a different set of fuel sources, let's say, over the next 5 or 10 years? And that's a more complicated question than you might think.
A lot of things to think about, and I do want to bring out the S&P Global Commodity Insights special report released earlier this year on the energy transition's disrupted path forward. So in it, it mentioned that companies and investors, they are positioning themselves for an era that will be defined by a renewed focus on energy security, the proliferation of AI across the economy, intensifying geopolitical competition, and continued climate risks. Now that we're heading towards the end of Q3, right, Dave, are these trends more pronounced than what you had initially thought, and how is the industry reacting to them as a whole?
I would say they are more pronounced than we originally thought. If we take security on the one hand as the starting point there, for the energy transition discussion, the security of supply has become an even bigger topic than it was at the start of this year when we released that report. And you can really see that because the market's been reminded of the importance of that from big surprise events this year, including the war in the Middle East, the US dropping bombs in Iran. That's reminded everybody that security of supply is a critical issue, both for today's energy sources and tomorrow's. So that, as an informer of the pathway in renewable energy and new sources, is still top of mind. Now, you mentioned AI as well. We have a much clearer picture on the role of AI in helping to drive energy transition than we did even when that report came out. It is very clear that AI is here to stay. It's something that we're all using in our personal lives and our professional lives. And what that means for the energy markets is that demand from data centers, which run all of the process behind it, is going to grow pretty considerably. Some people think that the demand for electricity will grow by the power of 3 times. We'll have 3 times more power demand by 2060 than we do now. Now that sets the scene for investing in renewables, investing in new energy sources that wouldn't have been possible without AI.
Okay, now talk to us about the overall macro energy outlook amid the ongoing geopolitical backdrop, right? What strategy should energy companies and energy investors adopt to mitigate ongoing risks in terms of infrastructure investments or in terms of capital allocation?
Okay, so there's a lot to unpack there.
I'm sure.
The macro picture is a challenging one for industry leaders today and really anybody in the market. And the reason why I say that is the macro environment is informed by the US-led tariff initiatives that is actually slowing trade and slowing economic growth, which creates a slower macro environment for every decision that needs to get made around supplying energy to the market and moving it around the world. So the challenge there is that when you marry a slower macro environment with the unpredictability of geopolitics and the unpredictability of the US administration particularly within that dynamic, by the way, on purpose, by design, the US administration is hard to predict. But as a leader, if you have a slowing environment, you might be tempted to go what you might call going short on the market and maybe make fewer investments in supply. But if there's a surprise, you don't want to get caught unprepared either.
What can companies and what can investors do to diversify that risk or to ensure that they have a reasonable amount of investments for the longer term?
Sure. Well, it's important to take a step back from all of that, and this is what I think leaders are doing right now to manage that environment we just talked about, and focus on, from a capital allocation perspective, what are the best returns that you can get by deploying capital into the market today, and how do you marry that up with long-term assurances that you will get that recovery of your investment? So that means that projects that attract investment need to have strong economics and strong partners to deliver the outcome that you're investing in. So we're seeing that happen. It actually, this kind of an environment drives a flight to higher quality when it comes to projects and economics.
You talked about, where the payouts make sense. So what are some of the bright spots? What are some of the trends that oil and gas players can tap into, be it in the near term and in the longer term?
Yeah.
And what kind of conversations and partnerships then you hope to foster through the APPEC?
Sure. So Asia Pacific is well positioned for people to make these kinds of choices because it is the epicenter of growth in the global economy. Most of the growth that will happen in the world will happen in the Asia Pacific region in the next 20 years. So there are strong fundamentals around that. But when you dig into it, the same risks we talked about are true in Asia that are true in the rest of the world around slower demand and greater unpredictability. So we're seeing leaders and industry participants choosing to invest in projects that make more sense financially based on market economics, and they're steering away from projects that make less sense for financial reasons and maybe have more of a policy backing. Now let me give you a real world example of what I'm talking about. Sustainable aviation fuel, which is an alternative source of fuel for airplanes that are flying around the world, based on biomass and maybe cooking oil and those sorts of sources, those are not financially viable without policy and subsidy support. In this environment where global demand is slowing and uncertainty is increasing, we're seeing people pull away from SAF investing because the economics aren't there if the governments don't support it in the background. But they're pivoting towards, let's say, LNG and natural gas, where the returns really are there today, with or without government support.
All right, thanks so much. I really appreciate the insights today, Dave. That was Dave Ernsberger, co-president of S&P Global Commodity Insights. And that was an on-the-go special of Under the Radar with me, Chua Tian Tian, signing off from APPEC by S&P Global Commodity Insights held at Raffles City Convention Center this week.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.